Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the volatility index, ticker symbol VIX. And I'm starting off with the VIX so that you can get an idea of how low the volatility really is. This line right here, this horizontal line that I drew weeks ago, is the historic low for the VIX. And we are still right on these historic lows, below $10, below 9.5, now closing at 9.22. Now, as you can see, the forecast from last week did not pan out, nor did it pan out for any of the other markets, as you'll soon see. The markets were jolted this week with an incredibly optimistic jobs report, which I'll get to in a little bit. And as a result, investors are back on their heels now, relaxing. Now, before I go into the other markets, let me explain to you what the volatility index means when it's this low. If the volatility is low, it means most of the investors that we have been watching over the past 5 years or so have been enjoying the fruit of a bull market, and therefore they are just sitting on their positions. They're a little bit too timid to buy in at the highs, maybe feeling that the markets are overextended. So they sit on their buying power, they sit on their positions, and they do nothing. And that is why the markets tend to go to historic lows. Now, when the VIX is at historic lows, that generally means that we've reached market tops. Now, this might seem a little confusing because the markets keep going higher and higher. This is a 20-year chart of the VIX, and you can see how low we really are with respect to those historic lows right there. And so what does that mean? Well, we have to be very, very cautious because the markets have not turned down or have shown any kind of correction or nearing a correction whatsoever. And so we have to be very mindful of our stop loss orders as we move higher. If that's the case, we need to trail our stops up so that we're protecting any profits that we're currently holding. So that's the VIX right there. Now, the VIX is related to the S&P. Before I go to the S&P, I'm going to erase these lines. I'm just moving them over because I still believe that the VIX is going to go higher. I'm just going to remove these right here. I'm going to remove that. I'm going to remove this. And we had that targeted right around 12.5. I'm still very bullish on the VIX up to at least 12.5. So I'm going to leave that in as a 2-week forecast. Going out for 2 weeks there, made that line a little bit longer. Now let's go to the S&P. If the VIX is expected to go higher and the VIX is inversely related to the S&P, let's look at the spiders, ticker symbol SPY. Again, we bounced off of that role reversal support. We did not pull back like I thought we would. But I do think we're going to pull back in the near future. Probably next week we'll pull back after the news is absorbed of this great jobs report. And there you go. We have a long stretch of green candles. Let me zoom in there for you. Long stretch of green candles called a stale green light. And we have a failed bearish engulfing pattern there from last week. And that happens about 20% of the time. The bearish engulfing pattern is accurate about 80% of the time, so it fails 20% of the time. But this support level is most likely going to be tested. So I'm going to bring that out a little bit right there as we expect the markets to pull back next week. We also have to watch for the drop in volume. We had a slight drop over the past couple of days, but this was a shortened trading week. I think that next week we're going to see the volume start to drop, and I'm going to even forecast the drop in volume right there. As the volume drops, the buyers tend to lose momentum, and then we have short-term profit taking that pulls the market lower. Looking at the diamonds, we're pretty much going to see the same thing right here. The markets did not pull back, but I'm going to move that over. I think the markets will pull back next week, mainly because we had a dramatic drop in volume towards the end of this week, even with the positive jobs report. You can see CNN reported that the economy added 2 million jobs in 2017. Well, whether you like Donald Trump or not, he is keeping with his campaign promises. He said he's going to go down in history as the greatest jobs president, ever to exist in the history of the United States. And I believe he's on track to do that. 2 million jobs is something that cannot be ignored. And in fact, in December alone, 148,000 jobs, new jobs that is, were created. So if the Dow is a representation of what we think the economy is going to do over the next 9 months, we could see higher prices down the road, but I do expect periodic pullbacks along the way as the market continues to hold that 20-period moving average. Looking at the Russell 2000, same thing. We had a forecast lower. It came back to the 20-period moving average, but it bounced off of that. We're now at a point of resistance right here. And so I think that next week that resistance is going to hold. I'm going to put that out just a little bit so you can see that. I think the resistance is going to hold. I think we'll see a little bit of a pullback. And you can see these lines here, here, and here were my forecast lines from weeks ago, and I left those in place. And you can see, again, this is the first week in many, many weeks that the forecast did not pan out, but that doesn't mean that not going to pan out next week. I think that there's a very good chance the technical signals will work out like we think they will, and the resistance will hold, and we'll see a little bit of a pullback. And finally, let's look at the Qs. That's the tech sector. It did not pull back and bounce off the support right there, so I'm going to erase that line. I think we are going to pull back again, but we're going to have a little bit of a difference in the support in that this role reversal right here is going to be up here now. We're going to see that former resistance, once broken, will most likely hold as support, and I think that we will see a little bit of a pullback just like that, and we'll see also a drop in volume. Let me just clean that up and get rid of that last line right there. Now, finally, if you are tuned into the market, guys, make sure you go to our video library. You just go to www.themarketguys.com, click on the tab right there that says videos, and I'd like to bring your attention to the role reversal video because it's very important. It's what I just talked about right here. It's just a little bit ways down on the left-hand side, role reversal. It's about a 7-minute video. It's a great refresher if you've had a break from technical analysis and you need a little lesson. There you go. 7 minutes will get you right back on track. And we continue to provide first-class education in the world of finance and trading. So stay tuned. Look forward to our next report. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.